Aloha folks, welcome to another video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. First off, I just wanted to say Happy New Year to all my subscribers. If you are new to the channel, just wanted to say aloha. And if you want to learn about what great companies to invest on, primarily dividends companies, and you want to learn about investing in dividends, you definitely want to hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on the new videos that I put out. As always, please remember, this is not financial advice. I'm not a financial advisor. With that said, let's take a look at this company that you definitely want to put on your watch list. It is a company that has been giving out great dividends for the past 29 years. The company is called the Toro Company. The ticker symbol is TTC, and this is a company that designs, manufactures residential equipment worldwide. So this is a company that will probably benefit with the infrastructure bill that's going to start in the next couple of years. So definitely want to take a look at this company. So if we look at Yahoo Finance, you can see the market cap is about 10 billion, PE ratio is about 26, forward dividend yield is about 1.20. Now if you look at the performance outlook, it's kind of bearish in long term, but if you look down to the earnings, you can see it has been beating 4 beats for the past quarters. Now if you look at the revenue, you can see it for the past 4 years. You can see that steady upclimb of revenue from 2018 to 2021. See, from the last one, revenue is about 3.9 billion, whereas in 2018 it was 2.6 billion. Now if we look down to the recommended trends, you can see a bunch of holds with one strong sell. The rating right now is between a hold and an underperform. Analysis rating currently is under the average. At the time of this video, it was 99. The average is about 102. Now if we look at this article by Simply Wall Street, you can see, and you can find this in Yahoo Finance, by the way. So it looks like a good stock. It's going to be ex-dividend soon. It's been passed, so it was written in December 2021. Definitely take a look and read this article. But if you look down to it, earnings and dividends have been growing. So if you look at it, the bottom line is Toro has been growing earnings at a rapid rate and has conservatively low payout ratio, implying that it's reinvesting heavily in its business. It's a promising combination that should mark this company worthy of closer attention. So definitely want you to, if you have a chance, go read this article, give you some information more about this company. Now if we look at the dividend, Simply Safe Dividend, looking at the dividend safety score, they rated it as very safe at 84. Again, the dividend yield is about 1.20. Market cap is about 10 billion. Now if we look down further to the key metrics, you can see during the recession it has increased it with the payout ratio about 29%. Now looking at the dividend growth, you got to check this out. So the last 20 years is up 19%, which is very fast. Last 5 years, 12%, very fast. The latest about 14%, which is very fast. You can look at that going upward trend. So started 2002, you can see. Now if you look down on it, the dividend growth only has been 12 years consecutive increases. However, the uninterrupted dividend streak is 29 years without a reduction. So if you look at the payment details, quarterly you'll get paid on the months of January, April, July, and October. However, if you decided, January, you got to go look at the dividend, the ex-dividend date. So the ex-dividend date was on December 27th. So if you did it before that, you would have gotten your payment on January 11th. So now if we look at tip ranks, their rating is a moderate sell based on 2. Now if you look at the price target at the time of this video is 99. Their price target is in the 101. Now if you look at their highest price target is in the high of 118, the average is 101, and the lowest 85. Now if we look down to simply Wall Street, you can see that based on their share price and fair value, you can see it's undervalued, so it's about 7% undervalued, so you're pretty much getting it on a good values. Now if we look down, if you look up to some of the Toro competition, you have the Deere, Caterpillar, so these are the well-known companies as well. Look down to some of the overview, you can see flawless balance sheet with solid track record, and it pays a dividend. So you can see earnings have grown 10% per year over the past 5 years. Earnings are forecast to grow 9% per year, and it's trading 7% below its fair value. Now if we look down to CNN Business, you can see their price forecast is in the high of 120, the median is 102, and the low of 85. Now their analysis rating is pretty similar. 5 holds, 1 underperformed. Now if we go to Webull, based on 7 analysis, they're pretty much the same, rated as a hold. You got 85% as a hold. Price target is similar to 120, 102, and 85 is the low. Now if you're ready to start investing this new year, my link is in the comment section. If you use my link, you get 2 free stocks. You got to deposit at least 100 so to get that stuff. So definitely want to check it out. There's also links for for Robinhood and M1 Finance. Now if we look at bar chart, taking a look at bar chart analysis, they have it as a hold for the past 3 months. So if you look down to the breakdown, you can see currently it's about 1 moderate sell and 2 holds. Now if we go to the chart, you can see it's kind of, for the past 6 months, it's kind of choppy, right, in my opinion. So I would look for an entry point. As you can see, the past couple of trading sessions, it's been on the sell. See that high big sell in the market there. But the MACD did a crossover. If you look at the Rizzo, it's on a extra bot, so I would wait until it comes down to around 179 and between the 0.12. So I would wait for it. If you're gonna eventually buy this kind of stock, you might want to wait and see where the bottom is. Probably somewhere around, like somewhere in here, maybe about 193 to about 98, somewhere in there, as you can see from the other ones. Yeah, so you can see there's a stuff here, but this is where the look like the bottom here, right here, way bottom. But now if we look down to some of the growths, you can see the 1-year return, it's about 5%. The 5-year return is about 74%. And then now if we look down to Robinhood, again the 5 years, again 76%. If you look at the 1 year, as you can see, I would like to see it go up like this. So see how this thing is going up. That's where I would like to see it. So right now it's kind of flat. It's a good way to see where you can enter. So 3 months, it's up 2%. 1 year is about 5%. The past 5 years is up 76%. Past month has been down to about 2%. So we'll see how it goes. For me, I'm gonna put this on my watch list. So as you can see, I added it on my watch list. Definitely gonna wait to maybe about 98, 97, maybe 93. Am I gonna do a heavy investment in this company? No, because I do have positions in Caterpillar already, but I do like this company. I do think it has some potential with the infrastructure bill. I like it, but if I was going to invest on it, in my opinion, I'll invest on it small, because I rather like Caterpillar more, because Caterpillar is more of a solid company in my opinion. So it is a buy for me, but I'm going to do a small position based on my portfolio. All right, guys, thank you so much for watching. If you want to look at other videos, there's definitely videos to look at. Please check it out. As always, please remember, stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.